In this video, we're going to talk about 10 REITs that pay a monthly dividend income. So, before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Real estate investment trusts, or REITs, are a natural choice for any investor looking to add income to their investment portfolio. A company that manages and runs a portfolio of various properties is known as a REIT. Apartment buildings, office buildings, commercial properties, hospitals, shopping centers, or hotels could all be included in this list, though individual REITs typically focus on a single class of property. Because they are required to distribute at least 90% of their income as dividends to their shareholders, REITs are very appealing because some of them offer yields of 10% or higher. Things become slightly more challenging for investors who want to generate monthly income. The majority of them distribute dividends every 3 months. Few companies pay monthly dividends, and even fewer are worthwhile to own. Monthly payers, especially those who use portfolio income to pay their bills, offer a greater degree of flexibility, so these should be given special consideration when building a larger portfolio. Here are our top 10 monthly dividend-paying REITs to consider adding to your investment portfolio. Number 10. Generation Income Properties Incorporated, NASDAQ, GIPR. Based in Tampa, Florida, Generation Income Properties is a real estate investment trust that owns and operates high-quality single-tenant properties, leasing to industrial and retail investment-grade customers. Generation Income Properties Incorporated's dividend yield in April 2022 came in at 8.82%. Generation Income Properties declared on April 7 a $0.054 per share monthly dividend, in line with the previous year. In March 2022, Generation Income Properties acquired a leasehold interest in a single-tenant retail chain department store in Tucson, Arizona for approximately $7.3 million. The acquisition was funded with 50% cash and 50% debt. The building is rented out to Kohl's Corporation and the lease generates about $824,000 of annualized gross base rent and an annual net rent of roughly $591,000 after payments are made under the ground lease. Generation Income Properties' dividend yield as of April 2022 was 8.82%. Number 9. Dynex Capital Incorporated, ticker, DX. Dynex Capital Incorporated is a Virginia-based mortgage real estate investment trust that invests primarily in mortgage-backed securities that are backed by the United States government or a U.S. government-sponsored entity. Dynex Capital delivers a dividend yield of 10.38% as of April 2022. Dynex Capital's revenue for the period jumped 8.27% year-over-year to $15.61 million, outperforming analyst predictions by $1.36 million. Cash and cash equivalents at the end of December 2021 increased to $366 million from $295.6 million in 2020, indicating the possible continuance of monthly dividend payments. Number 8. Gladstone Land Corporation, NASDAQ, LAND. Gladstone Land Corporation is a Virginia-based real estate investment trust that owns and operates a portfolio of farmland and farm-related properties based in significant American agricultural markets. These properties are leased to unrelated third-party farmers. In February 2022, B. Riley analyst Craig Kucera maintained a buy recommendation on Gladstone Land Corporation and raised the firm's price target on the shares to $32 from $31. According to the analyst, Gladstone Land Corporation continued to acquire significant assets in the fourth quarter of 2021, outperforming revenue estimates by and achieving greater economies of scale. Gladstone Land Corporation's dividend yield as of April 2022 was 1.39%. Number 7. LTC Properties Incorporated, NYSE, LTC. LTC Properties is a real estate investment trust based in Westlake Village, California, investing in seniors housing and healthcare properties across the United States. The company offers sale-leasebacks, mortgage financing, and structured finance solutions such as preferred equity and mezzanine lending. LTC Properties declared in April 2022 a 19 cents per share monthly dividend. LTC Properties' dividend yield as of April 2022 was 6.31%. Number 6. Whitestone, NYSE, WSR. Whitestone REIT is a Texas-based real estate investment trust that owns, acquires, and manages neighborhood shopping centers primarily in affluent markets across the Sunbelt. The REIT has consistently paid dividends for over 15 years. In February 2022, Whitestone REIT declared a 4 cents per share monthly dividend, an 11.6% increase from its earlier dividend of $0.0358. Whitestone REIT's full-year revenue for 2021 came in at $126.1 million, compared to $119 million in the last year. Net income in 2021 stood at $12 million, a 100% increase from the 2020 net income of $6 million. Whitestone REIT dividend yield as of April 22, 3.68%. Number 5. Chatham Lodging Trust, NYSE, CLDT. Chatham Lodging Trust manages nearly 40 premium brand hotels, including brands such as Hilton Garden Inn, Hyatt Place, and Residence Inn, across 15 U.S. states. Chatham looks to take advantage of properties where demand currently outpaces supply, paying particularly close attention to those that might be undercapitalized. Chatham does more than just own hotels. It also takes an active management approach by rebranding, revitalizing, or redeveloping properties that add value for both the hotel and shareholders. Number 4. EPR Properties, NYSE, EPR. EPR Properties specializes in education and entertainment-related venues, such as charter schools, movie theaters, water parks, ski resorts and golf courses. EPR focuses on what it calls its 5-star investment criteria, which looks at value, opportunity, execution, economics and position. To summarize, EPR looks for properties with a sustained competitive advantage, that can obtain a market-dominant position and can deliver an immediate return on investment. EPR switched from a quarterly payment schedule to a monthly one in 2013 and has continued to do so ever since. Number 3. LTC Properties Incorporated, NYSE, LTC. LTC Properties manages more than 200 different healthcare facilities focused on senior care. These include skilled nursing centers, assisted living communities and memory care facilities. According to its most recent quarterly report, LTC looks for 5 characteristics in a potential property: strong cash flows that produce an annual yield of 7 to 9%, experienced operators, defendable market positions, quality building structures and a favorable regulatory environment. Since its launch in 1992, LTC has had a presence in over half the country and continues to expand. Number 2. Stag Industrial, NYSE, STAG. Stag Industrial is a REIT focused on single-tenant industrial properties, such as warehouses, distribution centers, manufacturing facilities and office buildings. Stag typically focuses on cheap, out-of-favor properties that it can improve upon to drive up lease values. By targeting this type of property, Stag is heavily dependent upon the success of the industrial retail and manufacturing spaces. According to the company, there is a significant opportunity to improve its market position in this space, given the low individual correlation of such assets, relatively lower CapEx requirement and the low average investment size that improves acquisition potential. Stag is another REIT that switched from a quarterly to a monthly payment in 2013. Number 1. Realty Income Corporation, NYSE, O. Realty Income Corporation offers long-term lease agreements to commercial clients in the United States. It is an S&P 500 company that has increased its dividend 115 times since it was publicly listed in 1994. Realty Income Corporation's yield on April 2022 stood at 3.99%. Wolf Research analyst Andrew Rosavach upgraded Realty Income Corporation to outperform from peer perform on March 15. In April, Realty Income Corporation declared a $0.247 per share monthly dividend. The dividend was distributed to shareholders of the company as in May. Realty Income Corporation's dividend yield as of April 2022 was 3.99%. REITs can be excellent for producing higher yields, but they also frequently exhibit high economic sensitivity. During the financial crisis, REIT values plummeted due to a rise in defaults, a decline in income, and vacant properties. Interest rate sensitivity also applies to REITs. Although REIT prices and interest rates typically move in opposite directions, different sectors have different reactions. REITs have historically provided investors dividend-based income, competitive market performance, transparency, liquidity, inflation protection and portfolio diversification. REITs offer investors the benefits of commercial real estate investment along with the advantages of investing in a publicly traded stock. Which of these monthly dividend-paying REITs do you think are good buys for your investment portfolio? Let us know in the comment box below. Please like this video and subscribe to this channel for the best stocks to buy, investing strategies and much more. Thank you for watching.